This is just it's kind of a short example I'm going to show you guys. So I always talk about how some favorite value gaps I wouldn't short, some I would. It just depends on if are we in discount or are we in premium, where's liquidity, blah blah blah. So in this situation, what I'm looking at right now is there's a fair value gap right here, and you can clearly see this, and we have our market structure shift right here. So let me just draw that out quick. So here's our market structure shift. We have our fair value gap here, and if this wasn't premium, I would take this, okay? But if we draw the fib, you can see that this is not a premium, okay? So if we draw it, you can see the fair value gap right here is mostly below the 0.5. So if we went a little lower, I would have taken it. But why else would I have taken this? Well, if we go on the higher time frame, swing low to swing high from right here to right there, you can see that we're still in premium on the higher time frame. So I would expect a drop under this 0.5. Therefore, I would take this even though this kind of looks bullish. So let's say I wanted to go long at this 0.705 right here. Well, you could short this fair value gap because we are above the 0.5 still if you want to long this, okay? But you can only do that if there's a setup, and yes, this would be a setup if this was above the 0.5, but unfortunately most of this isn't. But there is a market structure shift, there is a fair value gap, so because we're in the higher time frame and because we want to get the discount for the higher time frame, then this would be a valid short if this was above the 0.5, okay? So hopefully this is kind of a clear example, because sometimes I say, well, I want to take that fair value gap because it's not and discount on the higher time frame, blah blah blah, and you guys probably get confused. But this is kind of what I mean. So just wanted to upload this quick example real quick. So here's a little update on what happened. So I will point out two things. So as you can see, I'm gonna draw this fib from here to here, and I'm gonna go on a 1 minute chart. Okay, so what ended up happening was at this time, okay, so at the time that we had this low right here, see this low, I'm going to draw it from this low to this high, and I'm going to draw it over here. At the time, this fair value gap, which was from the 5 minute, as you can see, this is the 5 minute fair value gap, was not in premium, okay, so you would not take this, okay. And then what happens after? Well, we get a new low before hitting the 5 minute fair value gap, and you get it to this low right here, and boom, I'm going to go back to the 5 minute. You can clearly see what happens. We go into the fair value gap finally, which is now in premium, and then you can see the clear rejection off this, okay? So it rejects about 5 points, it rejects about 7 points actually. It does not hit sell side, unfortunately. But you can see it's just a better entry because after we form that new low, you can see it's now premium. So we get up to this. It's also a 1 minute order block, which I don't really like 1 minute order blocks, but it's still technically an order block. And then we reject it, and then we go down. Okay, but why did we not hit sell side? Well, if you look at NQ, I'm gonna add it to my chart real quick. If you look at NQ, we actually had a smart money divergence. So if you look at this real quick, we see that ES made a higher high, okay, but NQ made a lower high. So in this situation, you would also look for the fair value gap on NQ, okay. Why would you look for it on NQ to short? Well, if it makes a lower high, well, that means it's weaker. So that means you would expect it to hit sell side. Well, you would not expect ES to hit sell side, okay? So you can see we have the same fair value gap right here. And we wick up into it, okay? We wick up into this fair value gap. You can clearly see we have a little inducement going on. Just a tiny amount of inducement, but it's still inducement. So we wick above this high, we wick into this fair value gap, and then boom, where do we hit? We hit sell side, internal sell side, not external sell side, but we hit internal sell side right here. And you can see you would not short this, you would short this, because one, the divergence saying that this is weaker, so this is going to hit sell side, and two, it still has that fair value gap and premium, okay? And as you can see on ES, we ended up bouncing off this 15-minute fair value gap. I would have liked this fair value gap instead, because it matched up with a 0.705, as you can see here. So that would have been a nicer entry in my opinion, but we didn't get it. But you can kind of see, hopefully you guys understand what I'm talking about right now, like kind of that divergence that I just saw and what you would kind of do. So yeah, let me know if you guys have any questions. Hopefully, again, this was kind of a live example that I showed you beforehand, and here's the update on what happened looking at the divergence for the NQ. So yeah, hope you guys enjoyed, and peace.